I wanted to ask about central banks and their independence, because it sounds like a dry question, but I think it's a really interesting one. New Labour, one of the first things the Labour government did in power was to make the Bank of England independent.
I have therefore decided to give the Bank of England operational responsibility for setting interest rates with immediate effect.
And in good times, it seems relatively uncontroversial, right? People don't care very much. It's a nice split. Ideally, you have technocrats who can't be accused of political bias one way or another. They can't do the thing that a chancellor might do ahead of an election, which is run an economy really hot, so people feel good and vote for them. But in more difficult times, people become suspicious of the capacity of technocrats to act truly independently of political bias. I think one of the ways to look at the way the bank behaved during the pandemic was that it, to my mind, perfectly fine, but it acted in concert to underwrite the state's incredibly huge expansion of its capacity during that crisis period. But this leaves us in a situation where politicians and certainly voters are going to keep asking questions like, why have my food prices continued to rise? Why is the interest rate the way it is? Why isn't the bank bringing it down? Can central bank independence survive? And should it? I'm going to start with Daniela.
Right. Maybe we should have gone the other way around, because I have a feeling we'll have different answers.
Yeah.
You mentioned New Labour's decision to make the Bank of England independent. But I always go back when I think about how did we get to that point. I go back to a speech that Milton Friedman, who was a very famous American economist. He was very famous when I studied monetary economics. And Milton Friedman came to London in 1974. It was at the Labour was in power. Everything was kind of going wrong, a bit like now. And Milton Friedman said, well, the problem that we have is that inflation, so inflation was in the minds of everybody. The problem we have is that inflation is not made by housewives, is not created by sheiks raising the price of oil, is not created by unions striking. Inflation is made by by governments who have access to the Bank of England and to its printing press. So inflation, he said, is always and everywhere a monetary phenomenon, but what he meant is a monetary phenomenon because the central bank is basically printing money for the government, and it shouldn't be doing so. It shouldn't be subjected to political cycles, and it should be isolated from democratic politics, and therefore we have to basically create a divorce between the central bank and the treasury or the government. This is how I think of it, as a divorce that Milton Friedman kind of dreamed in the 1970s. Central bankers, of course, were very happy because it means a lot less, in a sense, political pressure. And that divorce was then formally institutionalized. But it raises very important questions about the democracy to me and democratic politics, because it really assumes a world in which inflation comes from too much spending in the economy. It can be addressed by changing interest rates, by increasing if inflation comes down, you decrease interest rates. But we don't live in that world anymore. We live in a world where inflation comes from shocks, where monetary interest rate responses are not the right. Then they have to generate some kind of economic contraction in order to bring inflation back to target. And we also live in a world where it is increasingly clear that monetary policy decisions are always political. The price of money is political. That central bank independence doesn't mean central bank neutrality. And I think this is how I think about it. Independence doesn't mean neutrality. And to me, central banks over the last 4 decades have been guardians of a distributional status quo that has benefited capital. This is how I think, and if you want to think in very simple terms of, capital versus labor, and I remember reading a couple of pieces from Andy Haldane where he also thought about it like that. If we think in those terms, then central banks are the guardians of a distributional status quo that benefits capital. It's not always the case. During the pandemic, for example, we saw what I think should be the radical reform that has to be put in place, where there are mechanisms of coordination between the central bank and the government, especially during moments of crisis. And I would say we also live in a moment of climate crisis. We kind of tend to put it on the side because politicians don't like to talk about it anymore, but that doesn't stop the climate crisis from unfolding and accelerating. So I would say that Yes, the basis for central bank independence now, in a sense, have become weaker and weaker. The politics of central bank independence is much more obvious to the public. There are legitimate questions about how you design or how you design the relationship between monetary policy and fiscal policy. I think those questions are much harder and, in a sense, much more visible here in the UK because we have our central bank is more hawkish to me than any other large central bank in the world, and it has fiscal powers that it exercises much more than in any other rich country. And yes, I think probably there should be an end to central bank independence. Again, it's messy. No political change is easy, and no institutional change is easy. I'm very clear of that. But it will probably happen, and it has to happen.
A couple of you wouldn't expect me to agree 100% with that. I'm not going to, am I? That's good. Good for the podcast, and actually good for the wider debate. Because there should be a wider debate about these things. And that we went through probably too many years without having a debate about what central banks do was probably a bad thing, actually, with hindsight in the kind of glory years. A few observations, some of them just more points of clarification for your listeners. There's nothing absolute about central bank independence, right? It's independence over a very small range of things. So what you choose to do with interest rates is a decision for the central bank. But the target that's set when you're setting those rates is not one that central banks decide. That's decided by politicians as part of the political process. So the 2% inflation target is not self-imposed by the Bank of England. It's imposed by government.
It's hard-coded in legislation.
No, it's not actually. Price stability is. Mm-hmm. The 2% inflation target isn't. That's only in secondary legislation. And it's the government of the day's gift, if it's the will of the people, to change that target to anything else they want to be. And actually, that is a debate you should have as part of democratic legitimacy. And the fact that we haven't had the debate really in the UK is a bad thing, I would say, for the Bank of England. Other countries have had that debate about what is a sensible target for a central bank to have. Across the pond in the US, they have a dual mandate where they're looking to keep inflation under wraps at around 2%, but also supporting growth and jobs. Perfectly reasonable to have a debate about whether that would be a more sensible mandate for the Bank of England than its current one. I'm not sure it would make very much difference to the level of interest rates, but we could have that debate and probably should have that debate as part of ensuring that our arm's length body, in this case the Bank of England, is properly accountable to citizens ultimately via Parliament. I would argue, but then I wouldn't I, that overall, viewed in the round, the international evidence on the impact of central bank independence is absolutely overwhelming. As overwhelming as any empirical fact in macroeconomics today. That is a way, not the only way, but the most effective way of keeping inflation and expectations of inflation under wraps. And the truth is, expectations of inflation in the UK were all over the place prior to independence, and since then have been pretty much anchored at the 2% target, despite inflation itself wobbling all over the place, especially recently. And that's proof positive for me of the benefits of independence. Now, that's not remotely to be a complete apologist for central banking or not suggest that central banks can't get it wrong, because they can and they have. And most central banks, including the one I worked at for 32 years, has got two whoppers wrong. The first was the global financial crisis, which we largely missed. I was doing that at the time, by the way. Mea culpa. And then the inflation miss of most recent years. Which in fairness, I did get right because I was arguing for tighter policy when I was on the committee at the time that it happened. Now, those weren't all the fault of central banks. global financial crisis was largely about greedy bankers than it was about central bankers. The cost of living crisis was largely the result of external events rather than central banks keeping policy too loose for too long. Nonetheless, did they play a contributory role? Yes. Were central banks very good at fessing up to that mistake? No. Were both of those things an error? Yes.
Can I just add a point of clarification to your point of clarification? I would say, yes, you're right, of course, that it is politicians in the end that set the mandate. The politicians can change the mandate, but let's park that for a second. Your argument, the idea that, of course, central banks, when they change their interest rates, they anchor inflationary expectations and they hopefully also anchor inflation, and even if it's wobbly here and there, it's only part of what they do now. Central banks don't only move the price of money in the system, they also have very significant footprints in the government bond market. And the fact that they have a very large footprint in the government bond market is no longer, it's sort of an ad hoc intervention since 2015. And I would invite you to reflect on this because I'm sure you were there. The Bank of England, at least the way that I see it from the outside, has adopted a formal role as a market maker of last resort, which basically means without any additional accountability, the Bank of England has given itself the powers to go in and out of the government bond market to shrink or to increase fiscal space at its own discretion based on, okay, there is not hard scientific evidence that says you should buy this amount of government bonds and then this will happen, or you should sell this amount of government bonds and this will happen. It's more of a guess game. And if you look at the way in which the Bank of England and the government here, we can't blame just the Bank of England, in which they have designed the asset purchase facility, the institutional vehicle for implementing quantitative easing and now for implementing quantitative tightening. It's given, in a sense, it puts all the cost of the policy mistakes of the Bank of England onto the taxpayer here in the UK. So, to me, if the central banks were only moving the price of money around, and we can debate, well, is the price, this distributional effects, are they important or not? Is the price of money political? If we change the mandate, Bank of England also has had an environmental mandate. I'm not sure what happened to that. It's also been parked. Then we can debate this. But what the reality of where we are now is that central banks have acquired additional fiscal power since 2008 because we have a financial system. And the Haldane called it, we live in the age of asset management. We can also call it, we live in the age of government bonds being systemically important for the health of the financial system. And because of this structural change in financial markets, central banks have to intervene in that market, in the government bond market. They have to buy and sell, but there are fiscal repercussions that there is no accountability for. I still don't understand. I'm sure we will come very soon to discussing the budget. I still don't understand how Rachel Reeves doesn't ask the Bank of England why the net cost of the QE and QT program, which is supposed to run somewhere around 170 billion for taxpayers. 170 billion is a lot of money. Why is that not a politically debated issue? To focus only on the interest rate decisions of the Bank of England is to only see a very small part of what the bank of or the central banks do now, and independence in this case, to me, no longer warranted.
I mean, it's certainly let's replay history. It's certainly possible that when interest rates hit zero, short-term interest rates hit zero, back after the global financial crisis, and central banks were under massive pressure to do more, to get the economy going. We could have said, we're out of ammunition. We could have done. Mm-hmm. It really was something that was debated. It wasn't taken lightly, the decision to start buying government securities, QE, that all central banks took. We could have said, we're out, over to you, government. We didn't, because we at least had the option of doing other things. The other thing was to buy government debt, not to support fiscal policy, to be clear, but to get longer-term interest rates lower, as well as shorter-term interest rates lower. But we said we'd only do that if, one, you, the Treasury, were willing to underwrite it, right? Because otherwise there's a risk that we go bust, and that's the worst of everyone's. If central banks go bust, then we've all got a bigger problem.
No central bank can go bust in its own currency, though.
Well,
this is
we can have a debate about that some other time.
We can, but I think it's very important for the listener. Jerome Powell recently said in a speech when the Federal Reserve decided to pause quantitative tightening, or is planning to pause quantitative tightening, and he said very clearly, the governor of the Federal Reserve of the United States, he said, the losses of the central bank do not matter. We can never go bust. I think it's a myth. I'm not sure in your own currency how you go bust, but maybe it's possible.
Well, I mean, going bust for these purposes means either you print money to keep yourself afloat, or you receive bailouts from the government. The first of those imposes a nasty inflation tax on the world, and the second of them undermines the very principle of independence. So in a technical sense, of course, as with the government, you can print your way out of problems. But longer term, that creates further problems, and that's true of central banks as well.
With due respect, and we'll stop here. But the Bank of England printed a lot of money from 2020 to 2021, and there was no inflation. So the idea that you can print your money out of the problem, but you will generate an inflationary tax, that is also not entirely true. It depends on all sorts of other things happening in where the economy is. So I'm not sure that you would go bust. Maybe you would impose some inflationary tax. Maybe there will be inflation, maybe not. We had the decade of no inflation. Maybe you have to think about other ways to control prices through price controls. But okay, it's a longer conversation, I'm sure.
Yeah, I wouldn't. I mean, you're maybe conveniently forgetting, of course, what happened at the end of that episode, Daniela, which is inflation did pick up by dint of having held on that printed money for too long. So the laws of gravity did reassert themselves as the economy righted itself, and central banks were rightly criticised for having pumped in too much money at the time of COVID and perhaps prior to that. And I'd count myself as being, as voting for that, as being partly responsible for having done too much for too long. But for me, the key point is this. I think there have been some important lessons learned from that QE episode. I think most central banks will be very fearful about retreading their steps now. In fact, all the candidates to take it from Jay Powell as chair of the Fed have now disavowed the future use of quantitative easing. It does encroach upon fiscal choices without any shadow of a doubt. And the more debt you hold, the more in which it encroaches upon those choices. And that's why we all felt uncomfortable, certainly I did, in pursuing this path. And the deeper you were in, the more uncomfortable it felt. My only defense to what happened was, would the alternative world in which we'd stepped back and said, we're out, have been a better world or a worse world than the one that's panned out? And I've convinced myself, maybe only myself, having rerun that counterfactual, that would have seen unemployment 1 million higher. And that would not have been a price worth paying for where we are.
Just to clarify, and I'm going to stop here, just to clarify, I think the Bank of England from 2008 to 2022 did a lot of right things, including quantitative easing, including the turn towards environmental policy. I think we might have disagreements on whether the source of inflationary pressures was not the Russian invasion of Ukraine and all sorts of other supply shocks, rather than printing too much money. But I think your listeners will now have seen that two economists in the room have 5 opinions.
This is good. This is good. I like disagreement.